Welcome, everybody. Welcome to Crashes and Taxes. I am your host for this podcast, Rebecca Walser. Super excited to have you joining us on this week's version of Crashes and Taxes. I am excited to talk to you this week about something that's been such a hot topic in 2021, and people, I think, are really excited about the opportunity that this presents and that it will become. And I'm excited as well, but of course, a little bit of caution is definitely appropriate. And I want to go through why is caution appropriate in cryptocurrency. And so that's what we're going to talk about today. We're going to talk about the cryptocurrency phenomenon that has really been 2020 and 2021 and continuing on into the future. So what am I specifically talking about? I'm going to share with you, this is just a little clip I did of Bitcoin, and obviously Bitcoin is the most well-known crypto there is. Now, for those of you that don't understand, this is not a crypto intro course. I'm not going to sit here and explain crypto, but I would just basically say that the entire appeal and attraction of cryptocurrency is that it is a decentralized blockchain technology, meaning that it is outside of the control of the central bank. And when I say central bank, I'm talking about the central banks of the world. So not only the Federal Reserve, but the European Central Bank, the Bank of Japan. I'm talking about all of the central banks of the world. It is outside of the purview of all central bankers. And that is what is so appealing about it, that we might actually have a true currency, that it cannot be manipulated by monetary policy of central banks. And this is the attraction of Bitcoin from an economic perspective, from a how do I say this? From a perspective of why are people attracted to it outside of investment perspectives, people like to not have to basically be, tracked and trackable, and they don't necessarily want all of their purchases to be trackable and traceable. You had that whole Silk Road episode. I don't know if you guys are familiar with that website, but we're talking now about the dark web, and a lot of the things that are on the dark web, which is not the regular web that we're used to, you and I as just regular people. The dark web is just a different, area, and a lot of people use crypto on the dark web to buy things that they don't want tracked and traced. So I think those are some of the nefarious purposes of Bitcoin and cryptocurrency. But truly, in general, there is a great potential for cryptocurrency. And with great potential comes great issues. And what do I mean by that? So let's just talk about Bitcoin itself for just an example. I just want you to understand the breadth and scope. So Bitcoin, literally in 2016, at the end of 2016, was trading at under $1,000 a coin. And there's only 21 million Bitcoins. Remember, it was a set finite amount of coins that would be released on an ongoing basis. And so you get into 2016, 17, you've got less than $1,000 per coin. And we had a little bit of a jump up in the end of 17. We were up to 13,000. So we started to see the first real run-ups in 2017. So we're just talking about not even 4 years ago when Bitcoin really started to be taken off. So let's go back to the beginning of 17. I'll give you the market cap of the total Bitcoin. At the end of January of 17, we had $1 billion market cap, 1.01 billion. By the time we were running at 13,000 per Bitcoin, or over 13,000, we had a market cap of 117 billion. All right. So this is the early days of it not really being any kind of anything that people were really even discussing. So that's 17. In 18, we actually went down at the end of the year, and by December, we were trading. So we went up. We went up all the way to 13,000. And 18, we dipped back down. And at the end, in the low point of 18, we were trading at it was trading about $3,200 at its low point in 2018. So we're talking that you could buy a Bitcoin for $3,200 in 2018. Now we're starting to see, beginning in 19, we started to see some price run-ups again, not to the 13,000 level, but we did get back up to the 11,500 5, and our market cap now is 181 billion. So you can start to see the market cap starting to rise. And then you get to, and I want to just kind of talk you through here, right before coronavirus. So really let's just go here to the beginning of 2020. We were only Bitcoin on January 20th of 2020. January 2020, Bitcoin was trading at $85.96, $8,596. And our market cap was literally about, I'm just getting here to a dip. I'm just trying to look at all my analytics here. About 165 billion. So we had market cap 165. That's the total Bitcoin value in the world released at that time, January 2020, traded at 85.96, and we had 165 billion. There is a very specific reason I'm telling you these very specific numbers. Okay, and you're going to see it now. So that was January 2020. We dipped down on Bitcoin with the virus. It dipped from 80 what I just told you, to 53.92. So you can see in March, Bitcoin retracted, and at that time we had a market cap of 326 billion. So 53.92, and now all of our Bitcoin holdings out there, 326 billion. Now let's talk about the shoot up. The last lowest point was really in last year, September of 2020. In September of 2020, you could buy a Bitcoin for $10,323. $10,323 market cap at that time, 264 billion. So you can see how we went from a market cap of not even a billion, not even, and now we have a market cap in September of 2020 of 200 plus billion. But where are we today? So let's fast forward now. In December, we were at 26,000. So we went from, literally we could buy a Bitcoin for 10,000. In March, we could buy a Bitcoin for 5,000. Literally, there was a little trading window in March at 58.30. And then right before the end of the year, we dipped up. To, I'm just going to go back to my other chart. Just give me a second, you guys. This is also technical. So let me just go back to the chart because I really want to get you guys to see this really huge point that I'm making here. And that is, we started to really see a tranching up in November of Bitcoin. Why? Well, remember, in September and October of 2020, we had terrible months in the market. They were both red in all markets, all indexes across NASDAQ, the Dow, and the S&P, all red in the month of September and October. Why? We ran out of stimulus. We had run dry of the CARES Act, which had been passed in March. So we were able to get the stimulus passed in March that was able to sustain the voluntary shutdown that we did because of the virus. And that stimulus kept, recession at bay until September and October. And 2 months before the 2020 presidential election, Congress was not about to authorize more stimulus because they didn't want, and I'm talking specifically now about the House of Representatives, they didn't really want Trump to get reelected. We all know this. They weren't a Trump fan, right? They were a democratically controlled Congress, House, Senate was Republican. They didn't want Trump reelected, so they didn't pass stimulus. So we had a really bad September and October. And my theory is when people saw that we were doing well, but the market was starting to crash again in September and October, they jumped, they ran, they went like full force over to Bitcoin, and they haven't stopped. And this is what happened. Literally, since the end of the year, at the end of last year, we had Bitcoin trading at about $33,000 a coin, where it had traded in March of that year at 5,300. We went from 5,300 in March to literally the end of 2020 at 3,300. And now fast forward to April of 2021, and we are now in a $55,000, $60,000 Bitcoin trading range as we speak. And market cap on that level is $202 billion. Now, Bitcoin is not the only cryptocurrency. We have others, the second largest being Ethereum, as we know. Ethereum is different, though. Bitcoin is a 21 million coins and done. Ethereum is much more about decentralized technology and applications. So you've got things called dApps, which are applications which are actually powered by Ethereum. So Ethereum is way beyond just the cryptocurrency coin itself, and it's about actual technology. And basically, it's well beyond just a digital coin. So that's really interesting. If you ever want to learn about Ethereum, ethereum.org is a great website for resources on Ethereum. So what's happening now when you go to a situation with a 200 and plus market cap, and that's literally where we're at today. And in fact, I just was looking at a dip, but I'm looking at the total market cap for the Bitcoin. We're actually closer to 400. I was looking at a dip when I said 200. It's about, I'm sorry, I apologize. It's about 403 billion total market cap where we're at right now. When you're dealing with almost $500 billion of total value in the world, that is now leading to Tesla accepting Bitcoin, Starbucks accepting Bitcoin as actual currency that can transact an actual purchase in the United States of America. You have to understand, the IRS ruled that cryptocurrency is going to be considered an asset like other assets. And if you have a gain, if you basically buy, if you go into crypto with cash, that's your basis, that's your cost basis. And if you then sell it, at whatever time later, and you sell it for dollars and you go back into dollars, that is your sale price. And then the difference between your basis and your sale price, if it's under 12 months, it would be a short-term capital gain or loss. And if it's over 12 months, it'd be long-term capital gain or loss. That is what the IRS and the government decided in the last several years at that time was the treatment of cryptocurrency. However, now that we see cryptocurrency becoming such an actual presence, mainstream, this is what you have to start to worry about now. Crypto goes mainstream, and that is not good, and it is good at the same time. It's good because when crypto goes mainstream, now we have the ability to buy things mainstream, not dark web, mainstream. And I'm not implying that I was ever on the dark web. I'm just talking to you about the way the world works. We have the ability now, not through the dark web, but through mainstream vehicles, to use Bitcoin as actual real currency in America, Australia, Japan, multiple other countries that are starting and accepting Bitcoin as actual currency. And the second that starts happening, that's when we're in trouble. This is when this is becoming too big for the government to disregard it. And I need you to understand, the only way that this economy and this world works right now is through this monetary centralized policy of the central bankers. I'm not suggesting at all that I agree with it or that I like it or I think it's a good system. It's just the system that we have. And the system that we have will not work if the money supply is no longer within the purview and control of the central bankers of the world. So what I'm telling you today is, while Bitcoin might be a tremendously great investment that you have taken from this point to date, once it goes mainstream, and we're talking mainstream now because, you've got even TD Ameritrade, you've got Goldman, you've got TD, you've got things that are now trying to sell futures or derivatives on crypto. And so that's going to become more mainstream. You've got people that are ETFs that are trying to come out with fractionalized Bitcoin ownership, which will take it more mainstream, still as an investment. What you really, really, really have to look for and look at and caution yourself on is using it as a currency. Using it as a currency is what is going to be a problem for the central bankers of the world, because the second that we have a viable alternative to controlled money, and believe me, the world money supply, M2 money supply, it is a controlled money supply. The second that changes, we have to be extremely concerned about how the government will start to treat cryptocurrency, because they, unfortunately, in America, we have $30 trillion, I'm rounding up a little bit, but after the coronavirus, we absolutely have $30 trillion of federal debt, $30 trillion. And the only reason that people around the world buy our debt is because they need US dollars to transact their transactions in. In other words, It doesn't happen now, but it used to be that China and India wouldn't trade between each other bilaterally in their domestic currencies. They literally would have to go, each of them, and buy dollars and trade goods and services through dollars. They don't do that anymore. They're trading now bilaterally in their own currencies. And so the less and less and less that the world reserve currency of the US dollar is needed and is necessary, we are basically cutting off our own money supply through alternative currencies. And I'm not advocating, please understand, I am not advocating against that. I am not a huge monetary policy fan of how the central banks of the world manipulate currency. Absolutely not. But I recognize, as an investment manager, as a tax attorney, as somebody who's been in finance for 20 plus years, I don't want to date myself, but the fact is, I recognize that it is the very nature of the US dollar being the world reserve currency that allows us to spend as much as we spend when we only collect half of what we spend in actual taxes, and the other half we debt finance. And we have been doing that since 1987, since Ronald Reagan cut the corporate tax rate to the top rate of 28%, and US tax rates in general, top rate 28%. So what am I talking about here? If you go back and you realize that we used to not debt finance our lifestyle in America, we used to have to collect the taxes to pay for what we wanted because we were on the gold standard. So we couldn't just print money because you had to have physical gold to back up the paper money that you printed. And that was the gold standard. We started to come off of that in the 30s under FDR, and slowly, finally, we fully got off of it under Nixon in the 70s. When we fully got off of gold standard and we were free now for the first time to be able to just print fiat money, fake currency that is not backed up by a true hard asset like gold. That's why we call it fiat. When we moved to fiat money, really when we came off the gold standard, and then Ronald Reagan cut taxes in his second term in 87 to the top personal rate of 28%. We didn't stop spending money in America. In fact, what we actually did is we started spending more money, such that from 1987 all the way through present day, we have $30 trillion of debt accumulated that we have borrowed from other countries that have bought our paper because they needed dollars. So they bought our paper, and basically we have lived off of selling our paper since 1987. And now we're coming to this point of, you couldn't script this stuff, you guys. This couldn't be a more Hollywood movie. It's just so complicated and convoluted and so long that nobody bothers to put all the pieces together. But I want you to understand what's going on here. We have the perfect storm happening. And I mean literally the perfect storm. What is the perfect storm? We have the first time ever in the history of America, the retirement of our largest, before the Gen Z, our largest organic born population, the baby boomers, from 46 to 64. We had 75 million boomers born in that time frame. These people, they've started to retire, but we still have 65 million that are yet to retire, that are really retiring these next 7 years. We are on the precipice of the greatest transfer demographically from worker to recipient that we've ever had. We're about to become Europe and the United States of America from a taxation perspective because of the retirement of the baby boomers. So we have this massive demographic shift happening, baby boomers retiring, going on to Social Security, Medicare. The Congressional Budget Office has already told us in 2008 that we do not collect enough taxes to pay for all of the retirement of the baby boomers. So not only will benefits have to be cut, but we know taxes will have to go up, and they gave us tax projections. So this retirement of the baby boomers is the key. It is this shift, and it is the sea change that is happening now in this decade between now 2021 and 2028. Most of our boomers will be retired by 2028. There's a few extras that are retiring in 29 and 30, but for the most part, it's all done by 2028. So we've got 7 years of this massive demographic shift. At the exact same time, we have a global 100-year pandemic that we quarantine healthy people to, so we shut down business and we shut down the economy, which leads us to basically promulgate $8 trillion in 1 year of stimulus. And we're saying, whoa, Rebecca, 8 trillion, where did you get that number? 2 trillion for CARES in March, almost another 2 trillion for HEROES in the fall, 1.9 trillion for the ARP in March of 2021. That right there is over 6 trillion. And then you have $2 trillion that's been pumped in by the Federal Reserve. And we know that they're pumping in another 1.3 trillion at 120 billion per month right now as we speak. So you've got massive government stimulus. At the same time, you've got your largest population about to retire that's ever retired in the history of America on Social Security and Medicare, because those things came out when these people were first born, Medicare 65. And at the same time, for the first time in the history of the world, you have a currency since Bretton Woods, since since the modern central bank was birthed, Jekyll Island. Since all of those things have happened, you have for the first time a currency that is now being treated as a currency, because you can actually buy things with it, which means it is a currency and not necessarily an investment. You now have a currency that is going mainstream and that is able to be actually used to purchase very real things. And so this is literally all culminating at the same time. So let me just try to make it a little bit more clear. What we have happening all at the same time is 65 million boomers, that we're on the precipice of 65 million boomers retiring over the next 7 years. At the same time that we have just printed $8 trillion to get us through coronavirus. At the same time where we now have a viable alternative outside way to mainstream purchase goods and services. If you don't think that the government of the United States, and when I say the government of the United States, you guys, I'm talking about the world. I need you to understand this. If you don't understand the power that the United States has over the earth, let me explain to you as a tax attorney what happened in Switzerland. You had one person from UBS in Switzerland blow the whistle on US taxpayers that had accounts that were not getting reported in Switzerland. One whistleblower from UBS literally changed an entire country to no longer be a tax haven for US citizens. To basically, the United States government came in and said, you have a problem. Our citizens aren't reporting the assets they are holding in your country. We have a tax treaty with your country. You will report to us who is reporting, who has assets in your country by this date. And then they went back to the American public and they said, you guys haven't been telling us the truth and disclosing all of your assets. We're going to give you X amount of time frame to voluntarily report. Well, we're going to, give you a better deal. If you don't, we're going to get your name anyways from the Swiss, and you are going to be penalized. So I need you to understand, when the United States decides something, because of their leadership role in the world, most other countries fall in line. Now, there are some outliers. I'm not going to tell you we control the world, but we are extremely influential on asset reporting, on tax collection in the world. We are the only country on the face of the earth that taxes income that you earn wherever you earn it. If you are a U.S. citizen, it is taxed by the federal government wherever in the world you have the asset and wherever you earn income. So I want you to be very cautious about thinking that you're going to go and just take a whole big chunk of your portfolio and move it to crypto, because there are a lot of concerns that we have. I think it's a great tool to get some substantial upside growth, but I want you to be cautious in the sense that the governments now are being awoken to this as a real threat to their ability to control monetary policy. And that is where we are. You're talking about almost a $500 billion market cap just on Bitcoin, which is only 21 million coins. So this is not a problem now that it's going mainstream, that the government will be able to just treat as, a long-term asset that you're holding any longer. It's becoming a currency. And these others are becoming currencies. And when they do, that's when we're going to see the problems, because you cannot take away the power of the dollar as the world's reserve currency and think the United States isn't going to stand up and say, wait a minute, you're taking away our ability to literally fund our life. And that's what's happening here. So we're on the precipice of so many changes, and I hope that you're following this, and I hope that you're on top of this. And it's great to look at Bitcoin as a great long-term strategic investment. but I do want to caution you because the story has not been fully written, and how and where these cryptos go from here is a whole story unto itself. We're going to do another crypto episode soon because there are some other things I want to get into about crypto that I haven't been able to get to today. This was a lot of information, and so we will revisit another topic on crypto soon. That is another concern that I have, but I'm not trying to discourage you. I just am cautioning you to use caution when looking at crypto and really understand the macroeconomic implications of what you're doing if you're starting to use this as a currency. For those of you that are joining us every week and giving us the 5-star ratings and telling your friends about the podcast, we're growing exponentially, so please keep doing that. We really, really, really appreciate it. If you enjoy our show and you enjoy, please write to us at the office, at the practice, and we will love to hear from you. Otherwise, have a great week, everybody.